Good morning, everyone. My name is Sharon Mvududu, and I'm a proud committee member of the GWII. Thank you all for joining us today. The GWI prides itself in providing network opportunities as well as personal educational development. Our continuous development program is an initiative we feel strongly about, and I'm proud to host our third CPD event of the year. No event can go on without the support of our sponsors. We'd like to thank Old Mutual Insure for their continuous contribution to making this event possible today. We are truly grateful. Behind the scenes, there's much that goes on, from brainstorming to implementation, all of which to ensure a successful event. Many hands and capable minds are needed to bring us all together. And for that, we thank Old Mutual Insure events team, together with the committee members of GWII, for their time and effort. Just a few housekeeping notes before we begin. This, of course, is a CPD accredited event. For you to earn one phase CPD hour, you will need to remain logged in for the duration of the event. There will be a Q&A session following Molebatsi's presentation. Please, can you add your questions to the chat box, and we will address this at the end of the session. Okay. It is my absolute pleasure to introduce to you our keynote speaker of the day, Molebatsi Langa. She will be joined by the panelists Marvellous Rukundu and Tamara Naidoo. Molebatsi Langa is the Old Mutual Insure's new head of retail strategic accounts. She has held various positions at Old Mutual Insure and ABSA. She holds a postgraduate degree in leadership development from the University of Stellenbosch Business School and was a mentee in the IIG Roots and Wings program in 2021. When she's not working or studying, she enjoys running, baking, and spending time in the outdoors with her husbands and 2 daughters. Marvellous Rukundu is the OMI head of profitability. He's held various positions at Old Mutual and Regent Insurance, an actuary by qualification, and holds a postgraduate in leadership development from the University of Stellenbosch Business School. Our third panelist, Tamara Naidoo, is the Old Mutual Insure head of new business development. She has 20 years of experience in the non-life insurance and financial services sector. She has a degree in commerce from the University of KwaZulu-Natal and an advanced management certification from the University of Wits. Tamara Naidoo has been with Old Mutual Insure since 2015. She's been recently appointed as the head of the new business and acquisitions at the Old Mutual's Insure Blue Sky segment. Tamara is a visionary leader and has successfully headed several business units in the business. When not working, she's a mother, a friend, a sister, a daughter, and mentor. A cooking and photography enthusiast, Tamara is passionate about her family, which consists of her husband and 2 young daughters. She enjoys engaging with people and dedicates a lot of time to uplifting young and upcoming staff in overcoming challenges by using practical, tried and tested methods. Her accounting background translates to her being a problem solver, very comfortable with balance sheets and income statements. She speaks to me. She also started collecting arts for local artists. The panel is here to discuss the value of advice, sale trends to suit evolving intermediary customer needs, and what are the top trends impacting broker intermediaries in the short-term insurance market. I'm sure this will be an interesting panel discussion. And with that, I will hand over to Molebatsi.
Thank you, Sharon, for that wonderful introduction, and good morning to our attendees this morning and the GWII. Just give me a moment. I'm going to share my screen with you. Now, before we get into the trends, right, that we're going to be discussing this morning, please allow me to give you please allow me to let you watch this video, which will help us, which will be a good segue into the topics that we'll be discussing this morning.
We've talked over the last couple of years about the extent of disruption in this industry, and that disruption was characterized as the speed of technological change, fear of third-party entrants, changing customer behaviors. And in the PwC Global CEO Survey released every year in Davos, over the last few years, the insurance industry was identified as one of the most disrupted by virtue of the speed of those changes. In 2019, we've seen a dramatic shift toward optimism in this industry. This is a much more optimistic industry than it was a year ago. And I think the reason is that the industry has embraced those emerging technologies, the speed of technological change, changing behavior of customers. New market entrants are no longer viewed to be a threat as much as they are to be a distribution opportunity. And I think the industry has a whole new degree of confidence around the environment, enabling them to compete on a different customer experience for the first time in many of people's careers. On the topic of new market entrants, this industry has been concerned about what the internet companies and the online retailers might ultimately do in the insurance space, okay? What we're finding is that they're not so much interested in taking risk. They're happy to be fee-based distribution partners. And what we're seeing is the incumbents in this industry are embracing those online retailers. They're embracing those internet companies as a source of access to the consumer. I think that's what the real trend is. It isn't what was once viewed to be a threat is now being embraced as an opportunity. And the industry is very comfortable with the access to consumers that those online retailers and internet companies are giving them.
Now, Garth Napier, who's the managing director of Old Mutual Insure, has been quoted as saying that the South African short-term insurance industry is a vital socio-economic sector that provides a critical safety net to society. And if I might add, while the industry has had to contend with the effects of the COVID-19 pandemic, these effects being the major disruptions to the way that we work and connect, we had to respond to the business interruption claims that resulted from the pandemic, and trying to provide the much needed premium relief to individual clients and our commercial business clients. Surprisingly, the post-COVID era has presented both challenges and opportunities to the industry. Our discussion this morning aims at highlighting some of the trends that impact the industry, such as the increase in cybercrime, embracing insurtechs, consolidation of the market, enhancing and personalizing customer engagement and experience, and the value shift toward intermediaries. Now, the incidents, if we just start with cybercrime, the incidents of cyber attacks around the world have become so common and so rampant that one cannot help but wonder if any organization and even individuals, if any of us are safe. It is reported that ransomware attacks in particular had increased by 148% in 2021. And of course, this means that multi-million dollars of payments have had to be made by organizations to regain access to their systems. To bring it closer to home in South Africa, we've had numerous incidents of cyber attacks. And to name just a few examples, we've had data breaches related to 2 major credit bureaus in the last 24 or so months, with the latest one having affected 5 million consumers and a total of 600,000 organizations who were potentially affected by this incident. And as if the July 2021 unrest was not enough for us to deal with as a country and as an industry, on the 22nd of July 2021, the Transnet port terminals became yet another victim of cyber attacks. The impact of this disruption resulted in the Durban port, which typically handles about 60% of South Africa's trade, only being able to operate at 10% of their capacity. Now you can imagine how this incident added to the already challenging supply chain disruptions that we are experiencing all over the world. According to the Israeli cybersecurity specialist, Naidoo, with the increased reliance of the maritime industry on online platforms during the pandemic, attempted cyber attacks spiked by 400% between February and June 2020. That's less than 6 months. Now, all of these reports may be painting a rather bleak picture in our minds. And you know, for someone working in this industry where we rely heavily on data, you may even wonder if there is any hope. Well, there are a couple of steps or measures that we can take as businesses. The first being multi-factor authentication for remote access. Multi-factor authentication requires 2 pieces of evidence or factors to verify a user's identity. And I'm sure this is not news to many of us. On top of the user's password, multi-factor authentication can be in the form of a time-sensitive PIN code that is delivered directly to the user via an application or a text message, and in some instances, a user can request a telephone call to be made to them. Secondly, email filtering and web security. Email filtering is done with the aim of identifying any messages that include links or attachments that may have potential malware or other malicious content. Web security involves organizations blocking access to any websites that are deemed to be inappropriate and may contain malware. It is also advisable that these controls be active continuously. So irrespective of whether a user is accessing the network via the local network in an office environment or remotely, it is important that these controls be active at all times. Thirdly, cybersecurity awareness, training, and phishing testing. It is important that organizations provide the necessary training and awareness sessions for their teams on a regular basis, and also to run phishing simulations to test the effectiveness of these training sessions to their staff, and to also check their staff's alertness. The outcomes of these tests and simulations will help the organization gauge whether there's a need to intensify training or adopt a different approach in how they conduct their training sessions. Fourth on our list is privileged access management, or PAM. Special users such as IT, network, or database administrators should only be allowed to carry out specific tasks or defined tasks through their privileged access. users with this privileged access or administrator accounts should be required to log out of these accounts to perform any non-privileged tasks that they're authorized to perform. Lastly, secured, encrypted, and tested backups. Most organizations run backups, and it is required, or at least advised, that these backups are run weekly or even multiple times per month. These backups should be encrypted. These backups should also be separated from the network to ensure that they are not easily accessible to unauthorized persons. And of course, IT or the IT department would need to run a data restoration testing during the backups and to ensure that the backups are securely restored and that they are tested to ensure that they work as intended. Now, moving on to our next trend, embracing insurtechs. So insurtech refers to technological innovations that are created and implemented to improve the efficiency of the insurance industry. Insurtech powers the creation, distribution, and administration of insurance business. Now, Marv, I'm going to bring you in here. In the video we watched of Stephen O'Hearn of the global insurance leader at PwC Germany, he talks about how in the last few years, the insurance industry has been viewed as one of the most disrupted industries due to disruptions such as the speed of technological change, the fear of third-party entrants, and changing customer behaviors. He later also states that we have over time become a more optimistic industry, embracing things that we previously viewed as threats, and there's a perceived new degree of confidence around the environment in which we operate. So my first question to you, Marv, in light of what has been shared through the video as well as your experience, would you agree that we have become more optimistic as an industry?
Thank you, Molebatsi, for the question, and a very good morning to the audience. So I would definitely agree that there's optimism in the market with regards to insurtechs. I mean, the evidence is in some of the industry surveys. If you look at the response from different insurance companies on the need to embrace insurtechs, you can also see the thread coming through the different organizational strategies. I think in almost all the organizations, there's a hint of either partnerships or embracing fourth industrial revolution, or they'll directly mention insurtechs. I think part of the optimism, or the shift from fear to optimism, comes from, I think, observing the evolution that just happened in the banking world. I mean, the face of the banking world is different today through fintech and banks partnerships transforming that environment. So as opposed to sort of, insurtechs taking out some of the major players, it was more of a partnerships, collaborative effort of transforming the industry. So I think we are all hopeful and optimistic that through similar strides, we can see a similar shift in the insurance industry. Thank you.
Thank you for that, Marv. And I think just to add and, to attest to this level of optimism, we have seen the likes of Old Mutual Insure, a traditional insurer that is 177 years old, embracing and partnering with insurtechs such as SwiftV. Now, VSure as an offering is an industry first. It is a digital solution for the South African livestock buyer and auction market. Farmers on this platform, farmers can buy animals online, via a live streamed virtual auction and connect with the auctioneers and livestock agent. They then have access to this to Vsure online on the platform to, you know, and they are able to take out insurance on their new investment. Another example that I want to share with you is Pineapple. Now, who hasn't heard of Pineapple, right? Pineapple, if you think about it, all that is required is the item that the client or the customer wishes to cover, a smartphone, and clever AI. That's all. A user, in order for a user to get cover for the item that they wish to insure, all that they need to do is to take a photograph of the item, provided that it's not a person, a house, or a vehicle, and with the exception of drones, and there you go, they've got cover. And what an interesting, one of the takeouts that have always made me so interested in Pineapple is how it speaks to millennials, right? And I guess the changing customer behavior. And you can see it in how 80% of Pineapple's customers are millennials. Now, in light of this, Marv, would you say that intermediaries, you know, I think we've shared, I've shared some examples of an insurer partnering with insurtechs. So would you say that intermediaries are taking full advantage of the opportunities that insurtechs have brought to the market?
Thank you, Molebatsi. I think it's a difficult one to sort of judge, but I mean, if one is to draw parallels from the banking industry, and you see how banking was done 10 years ago and how it's done today is very different, and you look at the insurance and how we do insurance, one could argue that we haven't quite embraced technology to the same extent. So it leaves sort of an opportunity that there's more that we could do. I would certainly say there's I think what we're observing in the insurtechs or insurance industry and intermediaries, both intermediaries and insurers, is more of the front runners that are probably participating and leading the industry towards that, as opposed to being a widespread transformation where everyone is on the journey. And the few front runners haven't quite captured the lion's share of the market as yet they are rapidly growing. And if I focus more on insurance companies specifically, I would think that most of the insurance companies are still more internally focused, trying around certain things like trying to catch up on customer centricity, on updating legacy systems, etc., with the hope of eventually getting to really embracing insurtechs. And by that, I think we might be missing an opportunity to be proactive and being front runners through partnerships, or even participating in ventures or incubation of insurtechs as they come up.
Great, thank you, Mark. Thank you for sharing that valuable insight. Now, moving into our next trend, consolidation of the market. Now, Tamara, I know that this is very close to your heart and close to what you do on a day-to-day basis. So if I can share a study that was conducted by EY on the Belgian insurance market showed that between 2010 and 2021, the number of registered brokers in Belgium decreased by about 1/3. During the first 8 months of 2021, 485 insurance brokers had ceased their activity, while only 142 new registrations were recorded. And this suggests that the trend was accelerated by the COVID pandemic. So in light of the outcomes of this research, the study that was done by EY, and also closer to what you do and what you're so passionate about, Tamara. What have your observations been? And would you say that there are some similarities between the EY study in the Belgium insurance market and South Africa?
Thanks for the question, Molly, and thanks for the opportunity to allow me to chat to your audience today. So we all know that things move faster on the top side of Africa than here in South Africa, right? So in Belgium, I'm sure that the trends are moving faster than in South Africa. I wish I could have some statistics like this for South Africa. I'm sure I would pay money to have it. However, I don't have such information about our South African market. But we do have some trends, and we see some big moves that are happening in the South African economy, and especially amongst the brokers in South Africa. So it's definitely a trend that some of the bigger brokers are acquiring smaller brokers. We're also seeing many administrators in South Africa acquiring brokers as well. And even insurers are acquiring brokers. So it's definitely a trend in South Africa. I do think South Africa is slower to the take-up compared to European countries. I saw a study recently that said South Africans are taking up online shopping with the Checker 6060 and Pick n Pay AP and Take a Lot at a rate of 40% more than they were doing so 3 years ago. But I don't think that the trend is as fast, to take up online environments and close brokerages as fast as online shopping is in South Africa. I think our brokers will remain with us and a valuable part of our value chain for many years to come.
Thank you for sharing that, Tamara. And you talk about the value chain and how the South African market is probably not as moving as fast as the European market or countries overseas. And I've listed here just a couple of drivers, right, that often stand out as what drives consolidation amongst intermediaries in particular. And these are consumers. Digital expectations are increasing. Tamara, you mentioned the online shopping, and I think some of us are very guilty of that. Digitalization, tighter regulatory requirements that lead to increasing professionalization, and the reality of an aging broker force that drives consolidation of the broker landscape. And Tamara, having worked, with brokers, intermediaries, and the vast amount of experience that you have in the insurance industry, do you think that these drivers will change the landscape? Yes, we might be slower than our counterparts in Europe, but do you think that the change in the landscape will happen, and to what extent?
So Molly, I think that it will definitely change, but it will change sector at a time. So at the moment, we're seeing it in personal lines. In fact, we've been seeing it for the last 10 years in our personal lines businesses, when we have so many more direct insurers. However, there are still customers who prefer the intermediated market, customers who are still prepared to pay for advice, and customers who actually enjoy dealing with brokers and, as opposed to the insurers directly. There's definitely still room for that. We see also the direct players moving closer into SME commercial type business. So we are definitely expecting that. From an insurer's point of view, we focus on our intermediaries, for example, at Old Mutual Insure. And the one thing that we are concerned about when it comes to commercial SME insurance is we're afraid that the online or the direct insurer is going to know far more about our commercial customers than we are in the short term. And they're going to risk select, and they're going to select the best commercial customers there. And it might leave the intermediaries and the other insurers with less attractive risk to take. So we need to up our digital game. We need to up our data game. We need to understand our data better so we can price better, and that we too can participate with the good risks. So I think that's very important. So when it comes to the regulatory environment, I'm sure all 650 of us on this call fully understand the complications of regulation and how it eats into our daily lives and our job requirements. So yes, definitely tighter regulatory environments has led it to be more expensive for the smaller brokers to do business. And it just makes sense for them to send their regulatory administration on to larger administrators. And in turn, it leads them to acquire these businesses in the future. So I think that the smaller intermediaries are definitely at risk because of tighter regulations. And the opposite is true, in that the bigger administrators are at an unfair disadvantage, that they can do things quicker, cheaper, faster, more digitally. And it leads them to grow their businesses faster. So the aging broker force is one that's very interesting to me. It's something that Old Mutual Insure has been focusing on in the last 18 months. It's so important to, as an intermediary, it's so important to be an active seller of your business, should you wish to sell your business, and know what you want. Do you want to sell your business? And don't wait for somebody to come to you and ask you if you would like to sell your business. You need to know when to sell your business, how to prepare your business for sale, and use agents to assist you to sell your business, because selling a business is very different from selling an insurance policy. So the aging broker force is definitely driving consolidation, but this intermediary group needs to know what they want.
Absolutely, absolutely. Thank you for that, Tamara. I think you've definitely given us a lot to think about as insurers as well as intermediaries. Now, moving on to our next trend, enhancing and personalizing customer engagement and experience. Now, Tamara and Marv, I'm sure you would agree that any insurer and intermediary that wants to remain relevant needs to continuously think about these factors, right? I mean, price as a start. I jokingly, I often say to colleagues, if you talk to Marv, he'll always say price, 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 and that's all that matters. But jokes aside, we know what's happening in the economy. We see it every day. Consumers are becoming increasingly price sensitive. Marv, how do we balance the need to stay relevant, as well as the need to be profitable as a business, and to make sure that we're pricing right, we're pricing the right risks, of course, and making our clients happy at the end of the day?
Thank you, Molebatsi, for the question. To correct you there, I don't say price, price, price. I say value, value, value. So I think it's about us as insurance companies and intermediaries keeping customers at the center of what we do. I think it's a phrase that has been thrown around a lot in terms of keeping customers at the center of what we do. But what I'm referring to is a real transition from the good old managing touch points so that you minimize negative variances or complaints. I mean, that was the start of it, but I'm talking about transforming the operation to delighting customers, to aligning your value system to what customers need. So end to end, having customers in mind in what we do. The challenge there is that these elements that you're displaying there have different weighting for different customers. So some customers are very price sensitive. Some wants to have an array of choice. Some want the convenience of buying insurance a minute before they fall asleep at night on their phone, So it's about harnessing that big data to be able to segment and understand the different client needs. And then it then boils down to the intermediary or the insurance to really focus on where space that they play, right? Because it will be very difficult to do that, everything for everyone. So it becomes about what segments are you targeting and you're playing, and can you be best in class for that in delivering value? That's what I think. Thank you.
Definitely. And Tamara, you touched on an element that speaks to choice, speed, and convenience when you mentioned online shopping. And I think it's so important that our customers be able to have the options, right, available, and the choice of how they interact with us. So, how important is having that online presence that addresses the need, for choice, the need for speed, and convenience.
Thanks, Molly. So I fully understand what you mean by choice, speed, and convenience. But sometimes I think about these three topics, and I think about behind the scenes, and I think about how the insurers see it. So in terms of price and choice and speed, there's so many new trends in the short-term insurance environment at the moment. So just two trends I want to talk about is, for example, microinsurance, right? So microinsurance is a new trend in South Africa. Microinsurance is not a hot topic on the customers' lips, but behind the scenes, the insurers need to focus on microinsurance because it's a cheaper format to do business, and which will lead to better choice and better price and better speed for their customers. So in order to offer our customers price, choice, speed, convenience, we need to do the right things in the background to make sure that it is easier to do business, that our digital platforms are available, but also from a capital point of view, that there are cheaper alternatives to traditional insurance.
Thank you for that, Tamara. And when you spoke about discussing the previous trend about consolidation, you spoke about how there are still customers out there that want to deal with it with an intermediary, and looking at the element of trust, right? It was very interesting for me that in most, if not all, of the research that I did preparing for this webinar, the articles that I read, the different studies, trust was a common theme in this research. The EY study as an example, of course, they mention how the number of brokers has decreased in the non-life space, and less brokers are registering their businesses to operate in the insurance industry. But the thing that also stood out for me was, they said beyond the price, customers are still looking to receive tailored advice from a professional whom they can trust and who understands their needs. And I mean, let's be honest, right? You can't do that with a bot. You can't do that on an application, although there are, I guess, functions on these applications that try and assist with queries, etc. And to bring it closer to home, with Swift V, JP Swart of Swift V is quoted as saying that, while farmers have embraced this technology that's now available to them, pushing buttons and not having to waste time filling endless forms when they buy livestock, they still want to work with someone in person. So after all of that has been done on the platform, the transaction has taken place, they've placed the insurance and gotten, the relevant confirmation of cover, they still want to speak to someone in person, someone they can trust, and someone who can add that personal touch to insurance. So, Marv, trust, it's not price, it's not profitability, but how important is trust?
Thanks, Molebatsi. I would say it's hard to rank these elements in terms of which one is more important, due to the fact that it's going to speak differently to different people. So So you find that to certain people, certain segments, we find that trust is built by being consistent in how you've delivered the service every single time the client has an interaction with you. Whereas with certain clients, trust is built by having a multitude of products that are with you. So it's really different for different elements, for different clients. I wouldn't really diminish it or put it ahead of other elements. It has to be hand in hand with the type of clientele that you're dealing with.
Yeah, no, definitely. Thank you for that. And Tamara?
So, Molly, I just want to talk about the entire short-term insurance industry, right? So our industry is massive. So we write gross written premium, into the billions every year. I think the latest number is like 160 billion rand, the entire industry. Personal lines, whether it's motor or householders, only make up a fraction of that. And at the moment, our customers are going direct more on the personal lines and the SME space. However, there's a huge industry out there, which is including engineering, corporate property, liability insurance, accidents and health, microinsurance. There's a whole myriad of products there. And those products are still being sold by the intermediary, and their advice is so trusted. And not to say these products are extremely complicated for us to understand fully. These brokers deal with these products every day. And so it's so important to have a trusted person who's done this before to give you great advice. So in 60 to 80% of the industry, this advice is still priceless.
And that is quite key. That is quite key. Thank you for that. And I think lastly, belonging, right? I mean, we are human beings at the end of the day. And as consumers, we have a need to belong to groups. We have a need to, contribute to social causes. Brand specialists would even say that, a brand needs to stand for and act along social relevant purposes. And, if it is done well, such stands for, socially relevant causes can actually support a price premium. So if we just think about some of the partnerships, and I'll use an example of Old Mutual Insure and a partnership that we are involved in. We've partnered with Reach for a Dream, where we sponsored a coffee table book called In Good Company, which features about 32 South African personalities in the form of pieces of art. And the purpose was to inspire hope, strength, and courage. And with the proceeds of, the sale of the book, we have opened up a dream room at the Lambano Hospice in Germiston in August 2022. Now, if you're like me, it speaks to my heart. And seeing the posts online, LinkedIn, Facebook, internal comms, that kind of stuff speaks to me, so I'm that kind of customer that wants to belong to, or at least be associated with an organization, an insurer, an intermediary that does the kind of stuff, the hearty stuff. And so Tamara, if just thinking about, that aspect of belonging, what would you say really makes the customer tick in that sense?
Yeah, I think the customers of the future, they're not going to look at your bottom line and decide to do business with you. The customer of the future is going to look at your social elements. ESG is a hot topic now. What we do in our environment, our carbon emissions, what we do from a governance and a reputational risk point of view. All of these things are going to be far more important. We live in obviously a social era where everything's on social media, and perception and reputation is everything. So if you must do business with a company that doesn't just do good, but is good, and they do it as part of their DNA, and not because it's a post on LinkedIn. So I think definitely, belonging and wanting to be with an organization that does the right thing is definitely what customers want. I know that's what I want.
Yeah, that's awesome. Thank you for summing it up so well, Tamara. And like Marv said, there's, we definitely can't rank these elements in any order of importance. They will mean different things to different people. But it's great to know that we have a common understanding, I guess, not just as colleagues, but as an industry, that these are important to our clients, and these are the kind of things that we should be thinking about in the decisions that we make, to help us remain relevant for the future and that future customer. Now, last but not least, our last trend that we will discuss this morning, the value shift toward intermediaries. I think in everything that Marv and Tamara have said in response to my questions, and some of the feedback that I've given you, shared with you from the research that I've done, there's an element of the intermediary still being quite key to this relationship. And these results, these statistics that I'm sharing with you today, are results of a survey that was conducted by Ask Africa, a market research company, and it was aimed at understanding the intermediary market and its challenges. The respondents, who were intermediaries, believe that providing advice to ensure clients make informed decisions, and secondly, supplying the overall better service than product suppliers are quite key to them. And this is the kind of value that they believe they will be adding to their clients' lives in the future. Marv, with the technological advances that we have seen and experienced, and again, the perceived threats of third-party entrants, changing customer behaviors, isn't it interesting that intermediaries still view providing advice as an important aspect of what they do on a daily basis?
Thank you, Molebatsi. I think I fully subscribe to the view for a number of reasons. Right? If you think about the role that intermediaries play, is really to bring in that human link, humanizing insurance in a world where we are digitized world, where we're trying to digitize. And if you think about how the risk environment is becoming more complex and growing on the one hand, and on the other hand, insurers are trying to simplify and standardize products. So that's where I think the intermediaries are going to find more sort of ground to play or room to play in adding value in the process, in terms of beyond advising just the client on how to transfer risk to an insurer, to bring in other risk management elements such as risk avoidance, risk mitigation, alternative risk financing on over and above the insurance product that will be there. So I think there's a role to play, and going forward, it will increasingly become more important. So I'm fully subscribed to the opinion.
Thank you, Marv. And Tamara, I guess my last question to you, how important are intermediaries in our value chain as an insurer that offers the majority of our products via intermediaries?
Yeah, so we all know that the broker, is an agent of the client. So the broker is the one who provides advice to the client, and technically it's the client who is paying the broker for advice. But I think that more and more insurers are becoming closer to the broker and assisting them to do their work, informing them of new products, assisting them to assist the client better when it comes to claims handling. giving them opportunities to risk manage better and allowing them access to surveys so they can understand it better, even assisting them with the payment of these surveys and these assessments so that they can understand the risk better and they can give better advice and pay the claim with more knowledge. So from that point of view, there's a huge role that insurers play in the life of the intermediary, so to assist them to do their job better, because we know that the customers want to deal with the intermediary. So it's our job to educate the intermediary and so that they can give better advice to the client, risk select better, put the good clients on book, and it's a win-win situation for all.
Yes, and you know what we always say at Old Mutual Insure, that we want to make it easier for our business partners being intermediaries to do business with us. And in that, they will be able to give better advice to their clients, right? So thank you for sharing that, Tamara and Marv. So in closing, it's very clear that the role of intermediaries, the role of advice, which is a critical function and purpose of having an intermediary, is very crucial, and it will continue to be important in our lives going forward, whichever medium a client chooses to engage with an insurer or to engage in an insurance partnership with an insurer. We live in and work in an ever-changing world that presents a myriad of challenges. But as you heard, there are just as many opportunities, if not more. And the contribution that the South African insurance industry has made to the economy and the lives of ordinary South Africans over the last 2 to 2.5 years has really been invaluable. It is important for all of us in the insurance industries, insurers and intermediaries alike, in this insurance value chain, to ensure that we keep up with these trends and that we continuously find ways to improve and harness the best of what the challenges present to us. And that's it from us this morning. Thank you very much for listening into this webinar. We sure hope that you'll have a great day.
Thank you, Molebatsi, Marvellous, and Tamara. Thank you for the in-depth insights. I'm always interested in cybercrime, as ransomware is one of the top risks facing insurance. I also just noted what you spoke about, the value of intermediaries as a risk. The value of intermediaries as risk is becoming more complex, and risk management is very, very important. We don't have any questions in the Q&A. I think a lot of people are complimenting you to say this is very, very informative. I just have a couple of questions. It was communicated in the media that OMI has acquired Generic, as the head of business development. Could you tell us more about why you guys acquired Generic?
Thanks, Sharon. I'd love to tell you more. So Old Mutual Insure is so excited about our acquisition of Generic Insurance. Generic is a niche insurance player in the South African market. They contribute meaningfully to value-added products, but they have a special interest in accident and health, and as well as medical insurance. So obviously, medical insurance is different from medical aid, and you need a very special dispensation on your insurance license in order to write that. And so Old Mutual Insure in the past has not really been active in the medical or accident and health space. So we were looking for a niche insurer to partner with, and we're very excited about our 100% acquisition.
Okay. Congratulations. Second question. Which area of the value chain is InsurTech impacting? And I just want to couple that question with another one. What is the relationship between blockchain and InsurTech, if there is? I think that's to you, Marvellous.
Cool, I was about to ask. Thanks, Sharon. So in terms of the space that InsurTechs are playing, it's really across the value chain. Every sort of element of the value chain, we are finding that there is use cases and InsurTechs that could improve the process. At a high level, I think I could group them into four areas. You could group them into many, but as a framework, if you think about, there is simplifying access that InsurTechs is playing, this linked to distribution in terms of using smart devices and phones to reach areas that were previously underserved by the traditional physical go to the more to mutual advisor or broker type thing. So that's one space where there's the reach and coverage for insurance is expanded. The second one is in terms of customized sort of insurance. This is, I think, some calling it the bite-sized insurance, insurance on demand, user-based insurance. All of those type of offerings are coming through because of the participation of InsurTechs. Third one is in the de-risking space. This is in terms of how we can use, for example, drones to survey a risk or assess the damage. I think that was part of the things that we used in the KZN flood disaster, to assess aerially what is happening there. We find that there is also use cases in terms of being able to integrate different data sets from different areas to improve your underwriting, risk selection process, or even just advanced analytics that is being employed in terms of risk selection in that part as part of de-risking. And the last part is delivering lasting experience for the customers, right? So across the value chain, service bots that are automating repetitive processes, AI deciding, where you should route the request or the query, and everything being done straight through, processed quickly. In terms of blockchain, I think that's a very interesting topic that the InsurTechs are all excited about, simply because of the benefits that blockchain brings, being that the ability for a ledger which hosts all the information relating to a transaction, and how you could have different type of information in this ledger, from electronic transactions to physical assets, records for that. So, and I think the other benefit is you can securely share that ledger to distributed computers securely. I think in the world where cybercrime is becoming a menace, blockchain could offer a lot of benefits. There is still, I think, a lot of theory behind what it could do for the insurance company, and less use cases that are in implementation stage. If anything, I think on the forefront is the use of blockchain towards more of the finance function. So payment of invoices, validating invoices, the reconciliation right through to financial reporting. So there could be various cost saving and efficiencies that could be realized there. Also reducing fraud in the system. But there is also, I think, other elements like smart contracts, event-driven contracts, where, through blockchain, you could potentially be able to verify that a certain vehicle that is on your books has had an accident, and process the payment immediately without much human intervention. There is use cases or theory on use cases on its ability to be used within the pricing and underwriting space, where you're able to access different ledgers of information as opposed to on relying on customers to ask information. Many uses, very exciting, but I think we still some years ahead till we see it land in the insurance company industry.
Okay, I'm looking forward, and thank you so much. That was a very good explanation. It's 11 o'clock, so I'm conscious of the time. So I'd like to say thank you again to our participant for joining the third CPD event. I really trust that this session was beneficial and you enjoyed it. And thank you to Molebatsi, Marvellous, and Tamara for the continuous support from Old Mutual. Thank you. And I'd like to close with that.